For the fourth month in a row, GTA home sales are up. And after a slow start to the year, the market has continued to gain momentum with sales increasing again in June, while the numbers of homes for sale continues to shrink. So are we looking at the beginning of a stronger second half of 2026? Let's break down the June GTA market numbers. So overall market trend, according to the Toronto Regional Real Estate Board, TREB, the GTA housing market continued to improve in June. A total of 6,770 homes sold compared to 6,191 in June of last year. That's a 9.4% increase year over year and another increase from May, making June the strongest sales month we've seen so far in 2026. TREB also noted that housing market conditions continued to improve as sales increased while listings declined. Looking at the bigger picture, sales for the first half of 2026 have now edged higher than the first 6 months of 2025, while new listings have dropped substantially. That tells us buyers are becoming more active even as inventory continues to tighten. So average home price. The average GTA home price in June came in at $1,058,658. That's a 3.9% lower than June of last year. Compared to May, prices slightly dipped by roughly $10,000. While that's a slight month-to-month decline, it's important to keep things in perspective. The annual price decline continues to shrink, meaning we're getting closer to where prices were a year ago. In other words, although prices haven't fully recovered yet, the market continues moving towards greater stability. So why sales are increasing? TREB President Daniel Steinfeld says the market is following exactly what is expected. After a slow first quarter, home sales picked up significantly during the second quarter. TREB had forecast that 2026 would be a year of two halves, and so far that's exactly what's happening. The board expects sales activity to continue accelerating through the second half of the year, creating more competition among buyers, satisfying pent-up demand, and eventually supporting renewed price growth. So some positive signals. Another encouraging trend is what's happening with home prices. So TREB Chief Information Officer Jason Mercer pointed out that while prices are still below last year's levels, the pace of decline has slowed considerably over the past several months. If supply continues to tighten while buyer demand continues to improve, prices could eventually return to 2025 levels before beginning to post year-over-year gains. That would likely give more buyers who have been waiting on the sidelines the confidence to re-enter the market. Let's break down by home type. So here's how each property type performed compared to June of last year. So detached homes were minus 2%, the strongest improvement this month and noticeably better than May. Semi-detached homes were minus 4.6%, so a slight pullback compared to last month. Townhouses were minus 3.1%, another solid improvement and continuing to recover. Condo apartments were minus 9.5%, the weakest performing segment this month, suggesting the condo market is still facing the most pressure. Overall, detached homes and townhomes appear to be leading the recovery while condos continue to lag behind. Inventory. Inventory remains one of the biggest stories. Active listings were down 13.5% year over year, almost identical to last month. That means buyers continue to have fewer homes to choose from. If this trend continues while sales keep increasing, we could see competition strengthen considerably during the second half of the year. Days on the market, homes are continuing to sell at a steady pace. The average property spent 42 days on the market, exactly the same as last month. Overall, most homes are still taking around 1 to 1.5 months to sell. The market isn't moving at a lightning fast pace we experienced a few years ago, but conditions are steadily improving. Economic indicators. Here's a look at the broader economy. GDP Q1 of 2026 is minus 0.1%, an improvement over the previous quarter. Employment is up 0.7%. Unemployment is at 7.6%, improving from last year. Inflation is at 3.2%. Bank of Canada overnight rate is at 2.3%. Prime rate is at 4.5%. So overall, we're beginning to see some economic improvement. Although inflation remains something to watch, lower borrowing costs combined with improving employment continue to support buyer confidence. TREB's long-term outlook. TREB CEO John DeMichel highlighted another issue affecting affordability: development charges. These municipal charges help fund local infrastructure, but they can account for up to 20% of a home's purchase price, making both home ownership and renting more expensive. TREB supports the proposal Canada-Ontario Development Charge Reduction Program, which would help municipalities lower these costs while receiving provincial funding to offset the impact. According to TREB, reducing these charges could play an important role in improving housing affordability across the GTA. So final thoughts. Here's the big picture for June. Home sales have now increased for 4 consecutive months. The first half of 2026 has officially outperformed the first half of 2025. Inventory continues to tighten, price declines continue to shrink, and buyer confidence appears to be steadily returning. While the market hasn't fully recovered yet, we're seeing more signs that the second half of 2026 could be much stronger than the first. If sales continue to outpace new listings, we may begin seeing prices stabilize and eventually turn positive as we head into 2027. So what do you think? If inventory keeps shrinking while sales keep rising, do you think we'll be back in a seller's market by 2027? Or is there still too much uncertainty? Let me know in the comments. And if you enjoy these monthly GTA market updates, don't forget to like, subscribe, and hit the notification bell so you don't miss the next month's report.